Hey guys, it's Steve with Futures and Charts. It's Friday. It's Valentine's Day, and it's about 12:30 in the afternoon. So some of the futures markets are probably closing up, and the market will be. I believe some of the stock market, will be closed on Monday. Um, there might be something in the futures that's going, but anyway, so far today, early today, we had crude oil was up a little bit, but it didn't take long to go south. So it's been trading down just about 30 cents or so, and diesel's actually up a penny for the March contract, and gas is down a penny. So, but it's there's some headlines out there still worried about tariffs and stuff like that. So it's putting pressure on the crude oil market. Plus, there was a build. The middle of the week report, the build from the EIA was around 4 million barrels of crude. So it looks like we have plenty of crude. Some of the refineries, I think, are going into turnaround, especially that one that had the fire in Nebraska, I believe it is, that they just decided to just shut it down and go through turnaround while they were fixing things. So it's that time of year where that kind of stuff happens. So the refinery utilization rate might be starting to go down. So that might actually keep the oil market or the crude diesel market up some. So anyway, depending on demand doesn't look like it's been great. So anyway, let's. I guess the next thing to do would be to just go have a look at the charts and see what they're telling us. And so we'll head over and look at the charts. Okay, so this is the daily crude oil chart, and as you can see, I've got some long-term trend lines here that I'm looking at on the weekly chart, which I'll show you in a second. But this is the trend line here that we've been kind of following to the downside. It was resistance, and now it's become support, but it's still such a steep angle that it could go much lower just riding this trend out before it bounces. But I do think we're still headed for a bounce at some point here in the near future. Let me switch this over to the weekly chart and see if we can't have a better look at what I'm talking about here. Let's see here. And then as you can see, the RSI, the stochastic RSI has dropped down quite a bit. But I'll show you, I got to show you something else on that too here in a bit. But could be some trend lines here from its swing low here, following it up to where this could get down to the $69 range before it bounces. There also could be the 618 level here on the Fibonacci is also a pretty standard area where you'd get a bounce, and that's right in that same area, just basically under 70. So I'm thinking somewhere down here, if you're thinking that you might need to, purchase some contracts or something like that, we'll see if it gets down to this point down here, and then see what the cash market's doing. It looks to me like the cash market it's been kind of low compared to the futures, and it seems like it wants to not go down, and the market's going down, and just kind of stay put. And then when it goes up, it seems to be going up. So, but this candle here is somewhat problematic, which makes me think it might continue to go down, because this is a long wick up here, and it's trading at the bottom of this range today. So that is definitely telling me it tried to go up today after these big long candles on the weekly, but this weekly candle is trading down here, which to me doesn't show a ton of strength at the moment, even though it's got support coming up. But that's what I would watch. And then if we go back to the daily, I'll show you what the stochastic RSI is looking like. It's really no momentum. It tried to pop up there when it was right here, but it's basically trading in the red, which means no momentum. It's below the trend line for the stochastic RSI, which would be, I believe, the 20 mark. So it trades between 20 and 80. And if you get over 80, it's overbought. If you get, or the momentum's really high, which generally tells you that the relative strength is going to be overbought, and now this probably is oversold to a point. So could go a little bit lower though. That's what I'm kind of seeing. The diesel market has been a little more resilient. Like it tried to come down, but it's just been hanging around up here. It could go sideways for a while till the market determines where crude oil is going to go. And this could be a demand thing where we're starting to see, with refinery utilization down, maybe we'll end up having some supply problems for the consumer. So hard to say what that means. This is a long wick to the downside, which means it was bought up yesterday. And today it tried to pop up, and now it's trading down at the bottom of its trading range. So it's just having a hard time deciding what to do with crude being down. So it's just it could be that it just trades sideways in this range for a while. And we do have support right here. Given enough time, we're probably looking at maybe coming down to the 240 range, which would still be a higher low than this low here. So it still looks to me like there should be some support under this market here eventually. Like right now, the diesel market is just it's just under a penny up. So let's have a quick look at the wheat market. It is having a great day today. This chart has not refreshed. We're actually up here. Let me see if it'll refresh. Yes, there we go. We finally hit the $6 mark. So that's a pretty nice breakout. We had this level here where it traded sideways. I think I talked about the other day, and we formed this nice cup with a handle, and it has decided to break out, and we're above this trading range now. So that's pretty good. That's showing some strength. So it actually popped above 6, and we're now trading right at 6. So nice move. Hopefully it continues. And let's see what else we got to look at here. Feeder cattle. We did kind of roll over in the feeder cattle, like I was saying, and we have a long-term trend here that goes way back to last September, and then we have a shorter-term trend line here, which follows a nice channel, and it's just bouncing right off of that now and just trading along the bottom of that. So if it breaks through that, the next support would be around 261. So that's something to keep an eye on too. So, but that may give us some strength here because it did trade in a range here for a while, right around that 260, just below 260, between 255 and 260. So I'm not sure what would have changed in the fundamentals for the feeder market, but it just looks like like I was saying here, when it popped up above there, it kind of surprised me that it did. But it eventually did what I kind of thought it was going to do, and it's trading down in the bottom of this channel now. So anyway, so one more look at the energies futures, and we're down 61 on crude oil and up 0.7 of a cent on diesel. So it's sliding back a little bit as I'm speaking. So anyway, thanks for watching, and we'll catch you in the next video.